And here's the thing, risk is the only thing that's really in your control when you're trading. This is something that's very common that can be found anywhere, is that there are actually only 4 outcomes in trading. When you talk about 4 outcomes, it's the big win and the small win, obviously, and the small loss and the big loss. But when you talk about trading, if you're talking about 50% hit ratio, and you're talking about the wins, essentially all of this becomes a wash. If you have one big win and you have one big loss, they basically offset one another, right? The objective in trading really is to be able to eliminate this big loss. And if you can eliminate this big loss, what ends up happening? It's the small wins end up offsetting the small losses, like this. And what ends up happening is that you just really keep the big wins in place. So that's the true objective of what we want to do in trading, is that we want to be able to say, hey, I want to limit the amount of losses that I'm taking. And it doesn't mean that I'm not losing money or I'm not making mistakes. These things, like we said, are part of trading. But when you do have those losses, you want to be able to limit them to small ones. And you have to be able to take away completely those big losses, because those big losses are the ones that something really happened. So whenever I look back in my trading, every time in the event that there's a big loss somewhere, I got to go back and say, hey, what did I do wrong here? Was it something that I was emotionally compromised with the stock? Was it something that was out of my control, like it was a placement, or it was earnings that I didn't account for? These are situations where, hey, this is an unacceptable loss that I've just taken here. What is the reason why it happened, so that I make sure it doesn't happen again?
Let's have a look at what that breakout might look like. Now, this is clearly an ascending triangle, and we've got a nice green candle there breaking through that previous level of resistance. Now, with that change of polarity, we know that that trade could come up, then come down to rest on a line of support that was the previous level of resistance, which is a winner. That's what it looks like. My ideal pattern of all time is a sideways up, sideways up, sideways pattern with breakouts signaling every single way, multiple chances to enter, multiple ways to engage, and how lovely to be able to have that second chance. What about if we have a look at a downtrending situation? You've got a staircase going down, sideways down, sideways down, sideways down, and you've got red candles leading your way into each breakout. Unfortunately, though, when we're in the markets, which do you think is stronger, fear or greed? Greed. So that sideways up is very common on the way up. On the way down, often things can fall from a great height with remarkable regularity. So just know, if you're looking to trigger into a short trade and pyramid in using breakouts, these breakouts don't always occur on the way down. Sometimes things just fall from a huge height, and that's something that can be confounding. That's one of the reasons why I don't pyramid into a short trade.
So over here, we have a top signal, right? This turns out to be actually a false signal. So we get short here. Maybe we make a little bit of money if we have a short target, but let's say we get stopped out. Now we have another top signal. Here we take this particular candle and look what happens. What's happening here? Is it working? It's working very well. Now these are hourly candles. So you can see this is 4, 5, 6 hours. You have plenty of time to get into it. Now we may have a bottoming signal, but we need a confirmation in order for it to be sure that this is a real bottoming signal. Is it really going to? Is it really bottoming? So far, we don't have a confirmation, so we don't take a long. As you can see, because we don't take a long, we save ourselves all this stop. It's only when we get a bottom signal. Oh, we got a bottom signal. Is this a bottoming signal? Maybe. Maybe it's looking good. We'll see if it can hold. It can hold the buys. Let's see. Not quite. It would have stopped out. Here's a second bottoming signal. Great. We're gonna see if we can get long here. Does it work? Not quite. Still bottoming out. Let's see if this works out now. This looks like it could be a serious signal. So we got bottom over here. We came into the signal, and now it starts to really run really, really, really hard. And that's the beauty of this kind of an indicator. So of course, it will miss occasionally. But the beauty of it is that when it misses, the misses are very small. They may be 15, 20 pips. When you're talking about entering these kind of, false candles, if it breaks the lows, it just misses, it's fine. But when it hits the turn, the possibilities here are 30, 40 pips. Remember, these are 60-minute charts, so we're not really going on very, very large time frames. Here's a bottom signal for us. Boom, boom, look at this. Bottoming, we got long here. Look how far it starts to run. Within 3 or 4 hours, we make 30 or 40 points very quickly.